If you are new to this class, we are a masterclass series that is designed to build confidence in case and fit consulting interviews. We show people how to interview well and how to feel comfortable doing it. So the goal is that by the end of this session and by the end of the series, you feel really confident in going into any type of case interview and really any interview period, because we also tackle a lot of the fit interview prep. And at Studio E, we always talk about if you're good at case and consulting interviews, it's kind of the hardest version of an interview other than investment banking and coding interviews. So if you can do this, you can do just about any other interview. Definitely worth trying to learn how to do the hardest version. And then once you learn the hardest version, everything else seems like a bit of a piece of cake. Okay. Again, my background, Washington MBA 2020 to 2022. I had my internship at ZS Associates and Strategy and Insights and Planning, and then went on to work at BCG Chicago as a consultant, where I also worked as the recruiting specialist as one of the additional roles that they put me in, where I oversaw all of the recruiting for Washington University. And now I work at Cohort, which is working to make college admissions guidance as accessible and affordable as possible. And just came back from Miami. On Sunday, I was running a huge fair out there trying to get some more leads. So that was really exciting. And then basically this whole week I've been closing deals in Spanish. So that's also been quite the experience. Been casing since 2018 and have some placed people in all of the companies that you see in front of you. Okay. For those of you who have been here before, this is no surprise. This is the series overview. In our first class, we talked about the structure of the case, as well as the case and the fit overview. And then on Friday, we talked about essential frameworks. So if you remember, it was a discussion of Porter's 5 forces, the 4 P's of marketing, and the 8 big buckets. So just to kind of get us started with a little bit of participation, can we get in the chat what are the 4 P's of marketing? And then someone else in the chat would love to chime in on what are Porter's 5 forces. I'll give you all about 20 seconds to write that down. Cool. So Knight, 4 P's, place, promotion, price, product. Love the memorization. That is perfect. That is exactly right. Daphne got that right as well. And then the Porter's 5 forces. So competitive rivalry, supplier power, buyer power, threat of substitution, and threat of new entry. That is exactly right. Some of the things that we talked about in terms of quick memorization of Porter's 5 forces is that you have the twins. So you've got buyer power and supplier power, and you've got competitive rivalry, which means established rivals, and then you have new entrants. So if you're either established or you're new, or if you're a buyer or you're a supplier, and then the last one, I think about the third twin is like purchasing power and substitution. Or threat of substitution, the substitution effect. So that's the 5th one, is the threat of substitution. Great. And then today we have a really interesting one. I think that this is actually perhaps the most requested topic that I get in my privates, but I think that because people are in Singapore, our numbers aren't quite that high today. But we're going to be talking about quant and mental math as well as paper flow strategy. So I think that we might run this again whenever people get back from Singapore, which I believe will be like March 15th-ish. Daphne, maybe correct me if I'm wrong, but somewhere around there we'll probably do some more of this. But today you're going to get the first taste of quant and mental math and paper flow strategy. So let's continue. We're going to talk a little bit about the role of quantitative questioning. Then we're going to talk about what equations you should memorize. Then we're going to go on to the biggest mistakes in mental math and top tips, going on into analyzing and interpreting exhibits and charts, which I would argue is probably the hardest thing to do in the whole quant space. And then finally, we're going to talk about paper flow with examples and do some case practice together. So like I said, there's going to be a lot of math happening here. And I don't want this to just be me like showing you that I can do mental math. I really want you all to try the mental math for yourself. So if you're in an ability to get on video, I will be asking for guest participation in a quick second. Okay. What does quant questioning achieve? So there are a couple of things here that are really important to notice about why do we even have a quantitative section in consulting interviews. It's answering all of these sub-questions. Can you be doing basic calculations in a client meeting to forward a discussion? So I can speak firsthand experience whenever I am speaking with a Fortune 100 wealth and asset management firm about their new product launch, and in discussing it with them, I've built out this huge revenue model, okay? 9 times out of 10, we're just playing with assumptions that are changing this really big model that I built, and that's going to show the impact of these calculations on the overall potential of the business. And truthfully, in most of these sessions that I run, it's not actually that I'm working through the assumptions live. Normally it's I've already figured out what is the sensitivity to all of these inputs, and then I build a slide that shows those sensitivities and describe it in a slide. Like, clients don't really like to look at calculations, but occasionally this does happen if you didn't actually build in an assumption and you need to build one on the fly. So this is where quant questioning is important. 2 is, are you mathematically literate? Like I said, most of this stuff happens in Alteryx and in Excel, and then also like Tableau, but that's more like data visualization. But occasionally you'll have to do a back of the envelope like quant build out for a client live, and like you could really lose your credibility and lose credibility for the firm if you're not able to do that. So you just need to know that you're math literate and that you can do simple addition and subtraction, multiplication and division. Can you derive actionable insights from numbers? So this is important because it's not so much testing that you can actually do the algebra. That's important, but it's also like, can you drive numbers from the algebra that you do? And I would argue that consultants are more valuable for this trait than any other trait, because a lot of the math crunching that happens can often be outsourced to our knowledge teams. But the interpretation of the analysis that's brought to you by the knowledge team is all on the consultant. So that's actually where we drive our value for the clients, is interpretation of the numbers that we're given. Can you connect together different pieces of information in a logical format? Super important, especially now because we have so much access to information. So it's not so much just doing algebra. It's not so much driving insights from algebra, but it is finding the right math that's actually important to do, because we have this term, and if you continue through the series, you'll find out that there's actually a lot of jargon that occurs in consulting, but a really popular piece of jargon that you would be wise to know, and even wiser to like throw in as to be like an insider in an interview, we call it boiling the ocean. So I don't know if you've heard the term boiling the ocean, but boiling the ocean means that you try and do so many different calculations that are just not important and that are so much into the minutia that you're wasting time. And, a consultant is actually, so the MBA consultant is being essentially charged to the client at a rate of hundreds of dollars per hour. Like, that is what our going rate is. Our hourly rate is in the hundreds. And if you spend that hour just cranking out some numbers that aren't actually going to be used, or appendix, they're just not valuable, then that is time wasted, which means that is money wasted. So it's important to know how to connect together logical pieces and know what's important. The next one is performing under pressure, just as essentially a stress test. And then 6 is gut checking your answers. This is perhaps more important than people give credit for, because people in consulting oftentimes don't have a lot of industry experience, so they don't have the strongest intuition. They tend to be type A, like insecure overachievers, just to be totally frank. That's like self-described. And because of that, the lack of intuition means that sometimes you might lose your credibility if you're not able to gut check your answers. So definitely we'll find out that dropping zeros is one of the biggest issues in this type of work. So you don't want to drop any zeros in back of the envelope math. Now we're going to go into all of the quantitative questions and what algebra you need. So feel free to take a screenshot of this, or if you really want to go more in depth, I would write all of these out just to practice, so that way you know exactly what they are. But these are essentially all of the equations that you have to memorize. So I hope I just saved a lot of people a lot of time with this page, because this page is essentially everything that you need to know in order to be successful in consulting in terms of required memory and required knowledge. So let's walk through all of them. Okay, so the first one is total revenue. Total revenue, as I hope we all know at this point, is quantity times price. Okay? Quantity times price. So if I have, 100 cups and each cup costs $5, then I have $500 of revenue after I sell the 100 cups. Okay? The next one is total costs. Total costs is seen as the total variable costs. We'll talk about that in a second. Plus the total fixed costs. Okay? Whenever we think about total fixed costs, what are some of the ideas that come to mind? Would love to hear in the chat. What are some things that come to mind whenever you think about fixed costs? Ooh, great question, by the way, Daphne. What if the math is wrong? How would I navigate that? So if you get math wrong in the case, normally the interviewer will let you know and try to steer you in the right direction, at which you should 100% receive the feedback and make the correction. I actually messed up the math on both of my final round interviews and still ended up getting the offer to BCG, and it was because I was able to bounce back really quickly, and they were somewhat silly mistakes. But if you do that in a client meeting and you get the math wrong, then you really need to be good at communication and owning up to the problem, especially if what happens more often is not that you did an incorrect back of the envelope calculation in front of a client. What's a lot more common, speaking from experience, and seeing it a lot from other associates, is that the client will be like, and normally it's not the client, because the managing director or the project leader will correct it before it ever receives the client's desk, but they'll be like, this assumption does not correctly route to this outcome in Excel, and you're totally missing this assumption. And that is the logical flow that is super important, that consultants and associates more often than not forget about. Okay, so what are some examples of fixed costs that exist in businesses? Just very, very broadly. This goes back to Tom Field's class, managerial accounting. Exactly. Overhead, real estate, machinery, insurance. Exactly. Yep. And if you think about, John Horn's class, he'll share that at a certain point, everything becomes a variable cost, but in the long term. But in the short term, you are thinking about essentially what are the products that don't go into the overall creation of a marginal sale, right? So the cost of goods sold would be a perfect example of a variable cost, as opposed to a fixed cost, which is you need the machinery in order to be able to produce things, and then you can produce several things with them. Okay, cool. So total variable cost plus total fixed cost equals your total cost. What is total variable costs? Total variable costs, I break down even more because it's so important and people forget this all of the time. Total variable cost is quantity times the unit variable cost. So if I'm making cups and I have 500 cups, or what did I say, 100 cups, but the cost to make the cups that we sell at $5 was actually $1, then my total variable cost would be 100 cups times $1, which would be $100, right? And then let's say that the fixed cost of whatever is, another $300. So then your total variable cost would be 100 plus your total fixed cost would be 300. So your total cost is 400. So then the total revenue being 500, your total profit, which is the next part, would be your total revenue minus your total cost, or in our hypothetical, it would be $500 minus $400, which would be $100. Okay? Profit is total revenue minus total costs. I know that beginning MBAs, and I've seen this many times, will mistake revenue for profit, and they are not the same thing. So, profit is total revenue minus total cost. I think most people know that. What people might not be as familiar with is what you see right under that line, which is the exact same thing, but broken out, okay? We know that profit is total revenue minus total cost, but we know that total revenue is a function of Q times P, quantity times price, and we know that total cost is a function of total variable costs and total fixed costs, and that total variable cost is a function of quantity times unit variable cost, okay? So quantity is actually quantity times price minus, parentheses, quantity times variable costs, end parentheses, plus total fixed costs. That is the profit equation, okay? With that, you can do a lot of fancy stuff that we'll talk about in a second. But that is what profit is. I want to be incredibly clear whenever I say that profit and profitability are not the same thing. If you get a client or an interviewer in a case that asks you for the how do we regain profitability, then you should not say a numeric number in that, like, our profit is $200,000. We're trying to hit 10% profitability. The profit margin is the same as profitability, but it's not the same as profit. So what is the profit margin, or what is profitability? Well, it's profit divided by the total revenue. Profitability is the profit divided by the total revenue. So if you have a profit of $100 in our hypothetical example, and you have a revenue of $500, then your profit margin is 100 divided by 500. It's 20%. That is super, super important, because oftentimes in cases, interviewees are not listening to what the question's actually asking. And if the question asks about profit, you should give a number. If it's talking about profitability, you should give a percentage. Okay. Similarly, I'm also trying to speak a little bit slow. If I'm going too fast on these numbers, let me know and I'll slow it down. If I'm going too slow, let me know and I'll speed it up. But I know that math can be a bit harder to digest sometimes, so that's why I'm purposefully going slow on this. Profitability can be in the aggregate or it can be in the unit, okay? So at the unit level, it's essentially a contribution margin. So let's say that in the aggregate, we've got 100 cups, and then we find out that the profit margin is 20% because it's 100 divided by 500 in revenue. But you could also see that you could have a unit profitability or a contribution margin. The contribution margin would be the price, which we said was $5, minus the cost, which was, or the variable cost, which was, what did we say it was? It was $1. So it would be $4 divided by the price, which was $5. Okay, so our contribution margin would be different in this case because of the fixed cost. Okay, so keep that in mind. Then we have market share, which is also in the very similar realm. You have the total revenue divided by the total market revenue. So if you want to know how much of the cup market you own, and you own 5 million cups, or $5 million worth of cup sales, but the total cup sales are 10 million cup sales in cups per year, or I'm just throwing numbers around, then you have a market share of 50%. That's what market share is. It's how much revenue you have divided by the total revenue in the industry. Okay. If you can tell, almost all of what you need to know about memorizing quant is in the profit equation. Okay, it's just looking at the profit equation in different ways, understanding the difference between profit and profitability, understanding the difference between a variable cost and a fixed cost, and understanding the difference between a unit variable cost and a total variable cost. Okay? Great. Now, we're going to go on to a couple more pieces of algebra that are important to essentially have memorized. And guess what? They're just variations of the profit equation. So we're going to talk about break-even. What is break-even? Break-even is the profit whenever it equals 0. What did we know from the last slide? Well, we know that profit equals total revenue minus total cost. So we are just going to build the break-even equation, which is profit equals total revenue minus total cost whenever it equals 0. That is break-even. Okay, let's think about something different. How would you understand how many units you need in order to break even on an investment? Well, that is asking for the break-even, but instead of solving for profit equals 0, you're just looking at it in a different way. You're looking at it as solving for Q. Okay, so let's actually walk through this. Break even is whenever profit equals 0, and if you just push those things around, you're going to find out that break evening units is Q equals total fixed cost divided by price minus variable costs. Okay. Now we're going to look at two sides of the same equation, which is payback period and return on investment. Payback period is the investment divided by the annual profit. Okay, so if I have $1 million that I am investing into an initiative, and that yields me $100,000 in profit, not in revenue, then that means that it's going to take me 10 years to pay off my investment. You can think about investment the exact same as total fixed cost. Okay, so my total fixed cost is $1 million, and my annual profit is $100,000. Okay, and if you think about it, P minus VC, as we just talked about, is the unit version of figuring out what profit is. So if you have a $5 cup and your unit variable cost is $1, then you have a contribution margin of $4. Okay? The reciprocal of your payback period is your return on investment. So what do I mean whenever I say reciprocal? A little bit of a throwback to algebra class again. So payback period, your payback period is your investment or your essentially your total fixed cost for whatever initiative you're doing, divided by your profit, okay, annual, right? Whereas your return on investment is your net profit annual. I mean, it doesn't have to be annual, but like it has to be a standardized unit. So it could be your monthly pay, like how many months, it could be how many years. Most of the time you're going to talk in years. Divided by your investment, which is your total fixed costs. What do you notice about these two? Is that they are reciprocals of each other. So if your payback period is, you said you had 1 million divided by 100,000. So that's going to equal 10 years. Then this, your ROI is going to be 100,000 divided by 1 million, which equals 0.1. So if I can write 0.1, or as we would say, 10%. Okay? So because they're reciprocals, they actually work hand in hand. If you're asked for the payback period, you put the investment on the numerator. If you're asked for the return on investment, you put the investment on the denominator. Okay? So your payback period is a term, so 10 years. Your return on investment is a percentage, 10%. I know I went through that. I think I went through that quick, but I might have gone through it super slow. How are we feeling in the chat about all of this math? And is there anything else that you would like to see further explained? And is this making sense? It's all just a variation of profit and just playing with the profit equation at the end of the day. And I'm curious, are y'all actually like learning? Is this new information? One more example, please. Okay. So let's actually work through an example together. Light bulb moment. Right? I am the same way at night. Like I literally, when I realized this, I think it was like my junior year of college. So I was like 3 years into casing, and I was like, whoa, payback period is just the reciprocal of ROI. Light bulb moment. I'm glad that you feel the same, and I'm glad that I could contribute to that because it excited me too. And it's just like, whoa, it's literally just the opposite. Okay, Daphne, let's work through an example of a quick example of we have. Let me actually just build something out real quick for you. So we have. Let's just continue with this idea of cups. Okay, so cups. We've got a price of $10 per cup. We've got a quantity of, we'll just make it easy, 10 cups. We have a cost of $5 per cup. Okay, and we have a total fixed cost or an investment of $100. Okay, and based off of this information right here, I would love for us to figure out what is the profit of this operation. Okay, so whenever you feel ready to share how much profit are we making off of this operation, I would love for you to either put it in the chat or do a live call in and share. If it's a little bit easier, what's the revenue? The revenue should be mental math here. $5. Yeah, $5 per cup. Total revenue is $100. Great. That's right. What's our total cost? Well, I guess the first question would be, what's our total variable cost? Our total variable cost is 50, right? So 50 is our total variable cost. What's our total fixed cost? It's 100, right? So what is our total cost? It's just 100 plus 50, right? 100. So our total revenue is 100. Our total cost is 150. What is our profit? Any takers on profit? It's not looking good. Negative 50. Exactly. Negative 50 is our profit. Okay. If there was a question about payback period, there actually wouldn't be a great answer here because you're not actually you're not a profitable business, right? So that's where the issue's coming in here. So that would be a bad example. But let's say that our total fixed cost was actually only $10, okay? And so that would make our total cost actually $60, which would mean that our total revenue, our profit, would be total revenue minus total cost would be $40. Okay, so now we are profitable. If this was the case, and we were talking about the actual investment of this whatever the total fixed cost thing is, and obviously it's gonna not be $10, it's gonna be like $10 million. But if we were discussing this investment itself, then we would think about our payback period as the initial investment of $10 divided by the annual profit that we make, which is $40. Okay? So this is the payback period. What's our payback period? And we'll say this is per year. I know it's a little tricky because you're thinking about terms, but think about, your intuition's probably right. So the payback period, if you look, this actually becomes 1/4. That means, yes, that means that it takes exactly 1/4 or 3 months to pay back the initial $10 investment. Okay? That's what that means. Investment is the fixed cost that goes into an operation. So this isn't a great example because it's going to be like more reasonable numbers will be like a $10 million investment. But yeah, think about it like a space shuttle. Like how much would it cost to build the actual spaceship and like the space station, and how long would it take in terms of like space tourism dollars to pay back that space station and spaceship that they built? That's a way to think about it. So then my final question is, what is the return on investment here on an annual basis? The return on investment is pretty good, right? Like if you could make this, then you essentially have a money printing machine. That is the basics of profit. Hope that was helpful. A more simplified equation. Great. Okay. Moving on. Let's talk about some mistakes in quant that happen all of the time. And the most important one that I want to talk about is dropping zeros during quick mental math. I used to do this all of the time. If you find yourself doing it, catch it and kill it early, because that is the last reason that you want to get rejected in a final round interview, is because you made a silly mistake like dropping a zero. But like, that's the type of silly mistake that you should not make and that you're going to get called out on, because especially like top tier consultants are not going to have time for like that type of a silly mistake. So some quick things to keep in mind is that 1,000,000 is 1,000 thousands, which means that if you divide 1,000,000 by 1,000, you get 1,000, because you're basically chopping off 3 zeros. Similarly, if you divide 1,000,000,000 by 1,000, you get 1,000,000, because you're chopping off 3 zeros. Also, that means that because 1,000,000 is 1,000 thousands, if you divide 1,000,000,000 by 1,000,000, you're chopping off 6 zeros, which means that 1,000,000,000 divided by 1,000,000 is 1,000. Okay? If that sounds like really confusing, it probably is, but just think about it in terms of like chopping off 3 zeros. 1,000,000 is 1,000 thousands. 1,000,000 divided by 1,000 is 1,000. 1,000,000,000 divided by 1,000 is 1,000,000. Therefore, 1,000,000,000 divided by 1,000,000 is 1,000. If you get an equation like what is 11 million times 17,000, That is really, really, really difficult to answer with mental math if you don't understand zeros. But you can break things up. So, what is, you don't know 11 million by 17,000, but you do know a million times 1,000, because we just said that, if you're scaling up or down by 1,000, you're going from 1,000 to a million to a billion. So a million times 1,000 is a billion. So break that up. A million times 1,000 is a billion. Then you're just doing an equation of 17 times 11. And 17 times 11 is a little bit tricky, but you can actually do mental math to solve this as well. Try and get down to something that is more manageable, which is 10 times 17, because 10 is very close to 11. We all can do 10 times 17 because it's just adding a 0 onto the end of 17. It's 170, right? 10 times 17 is 170. That should be mental math we can all do. What did we do? We essentially chopped off 17 worth, right? Because 11 times 17 and 10 times 17, the only difference is one extra 17. So can we do 170 plus 17? It's not so difficult. It's 187. Which means that you take the 170 plus the 17, you're getting 187, and then you just tag on a million times 1,000, which is a billion, and you get 187 billion. That is what effective, structured, and logical mental math looks like for top consulting firms. Is that easy to do at first try? Definitely not. If you were just like, what the hell did Austin just say? Don't worry about it, right? It's not something that comes super quick, but it is a muscle that you build, right? So just like you're not going to be able to go to the gym and immediately lift 2 plates on the bench press, you will get there if you get enough reps in. So I highly recommend that you start getting your reps in now if you haven't been getting them in already, okay? With that in mind, let's actually try some math questions together, and let's not use any paper, okay? So my little marker is officially out of my hands, okay? I would really love some participation on this, okay? If someone would be brave enough to come off of the ether and then actually do a live call-in, that would make me so happy. And then we could actually walk through these together. And if you get it wrong, no worries. It's really tricky to do. I might get them wrong because I built this deck recently, but I actually didn't do any of the math. So I'm going through the math as you are going through the math. So I make silly mistakes all the time too. So we're kind of in this together. But I would love to wait for a live call-in to do A and B, and then we can take another live call-in for C and D. I know it's scary. It's really scary. I'll walk through the first 2. I think B is probably the hardest if I remember correctly. And then maybe that'll give some more confidence to the audience. Night seems like she wants to. Okay, we yeah, Night. There we go. So Night, I'll bring you in on C, okay? Because I think C's a bit easier. So A, and I'll actually show you guys what the trick is, okay? To not using any writing whatsoever. I hope I get this right, right? So I'm a little nervous too, and if I get it wrong, we'll figure out why I went wrong. But A, the total widget market is 170 million, and our sales are 30 million. What percentage of the market share do we hold? Here is the trick to solving all mental math issues. And I wrote it at the bottom. Always work in tens, whether that's scaling by factors of 10 or multiplying by tens of percents. Hits the sweet spot of precise and fast. you're never going to get it 100. Well, you might, but like most of the time, you're not going to get it 100% correct. But if you look at the work that we actually do at places like BCG, CEOs do not care about the hundredths place, right? They care about the millions place. Like, is this project projected to make 80 million or 90 million? That's what they want to know. If it's actually 82 million, they actually don't really care about that extra 2 million. Like, it's not a big deal, which is like mind-boggling because 2 million is a huge deal. But truthfully, all of these revenue models and assumptions baked in are going to be wrong because they're all just forecasting something that we don't actually know. So it's always better to just be a bit faster, but precise enough. Okay? So let's work in tens. What do I mean by that? The total widget market's 170. Our sales are 30 million. What percentage of market share do we hold? What is the equation for market share is the first thing that we need to have memorized. If you remember, market share was on that first slide that I shared, and it is the revenue that we have divided by the total industry revenue. Okay? So our sales, or our revenue, same thing, is $30 million. And the total industry, the total widget market, is 170 million. So you have 170 million on the denominator and 30 million in the numerator. For dividing, we know that a million divided by a million is 1, so it cancels out. Now we have 30 divided by 170. That's kind of tricky. How could we make it less tricky? Let's work in tens. What is 10% of 170 million? I hope that everyone says the same thing and saying it's 17 million, right? So then we just work in tens. What's 20% of 170 million? Well, it's 17 million plus 17 million. I think you can do that in your head. That's 34 million. Is 34 million more or less than 30 million? It's more, which means that 30 million is somewhere between 10 and 20%. You could just kind of wing it and say like probably 18%. If you wanted to get even more specific, you can think, okay, is 30 million closer to 34 or closer to 17? Well, it's closer to 34, so you know it's going to be between 15% and 20%. So that's why I would say like 18%. If you wanted to be even more specific, you could say, what is 1% of 170 million? Well, you know that 10% is 17 million. So that means that 1%, you just move the decimal place again, it's 1.7 million. So if 20% is 34 million, then you subtract 1.7 million. So you're going to have, essentially, you're basically subtracting 2. So you're getting 32.3 million. And that's going to be 19%. And then you subtract another 1.7 million, and you're going to get down to, pretty close to 30 million. So it's between like 17, 18%. Okay? And if I actually pull up a calculator, how much is it really? Well, 30 divided by 170 is 17.6%, right? We don't actually care that it's 17.6%. We care that it's in the ballpark of 15 to 20%. So that is the answer that would be good. I would have said 18%, and that is that's how you do mental math. Can we cancel the tech place? Oh, the what? Can we? I don't think I understand. Let me know if you need further explanation on that. But that is how you work on mental math case questions. Okay, I think B is the hardest one, so let's hope that I can get this one right. But I'll try and do it without any writing whatsoever. Oh, tenths place. Yeah. So I would say 20. I would say the right answer in this case would say it's a little less than 20% is the level of precision. If you said 20%, that would be a cause for concern. If you said 10%, that would be wrong. you should say a little less than 20%, and that would be a sufficient answer here. Yeah, you need to know that it's lower or higher than the number that you rounded. Okay, our manufacturing costs are 20 million. With that, we can make 39. See, and I'm even reading it as if I'm doing the mental math. With that, we can make 39,379 units. What is our approximate cost per unit? Really, really tricky, right? Let's round. Exactly, Alicia. This is exactly what you should be doing. You round up to 40,000 units because it's going to make the numbers a lot easier. But you need to know that because you're adding in a couple of units that don't actually exist, you're probably going to have a cost. Is the cost going to be lower or higher than your estimate now that you have additional units that don't exist? There you go. Perfect. Okay, so let's work in tens. Our total manufacturing costs are $20 million. With that, we can make 40,000 units. What's our approximate cost per unit? Well, we know that the equation would be 20 million divided by 40,000, right? So let's see what a bit of a plug in the chug using tens or using 100s, basically tens, 100s, ones, to figure out how we can get a ballpark. If our approximate cost per unit was $1, we know that 40,000 units would cost $40,000. That's way too low. If it was $10, then our total cost would be 400,000 units. That's still too low. If it was $100, then it would be $4 million, which is too low, but we know that 4 million is closer to 20 million. In fact, what number do we need to multiply 4 million by in order to get to 20 million? What is 20 million divided by 4 million? Well, it's 20 divided by 4, 5. So you take 100, you multiply it by 5, you hit 500. So $500 per unit is going to yield the total manufacturing costs of about 20 million. And to go above and beyond, rather than saying it's somewhere around 500, you would say it's actually a little bit, the cost is a little bit higher. Is it higher or lower? Now you've got me thinking, Alicia. Is it lower or higher? What do y'all think? It's a tricky one. You got to really think about it. I'll give y'all a second. Place your bets now. I'm going to get the exact number, but Alicia says lower. Knight says lower. Lower because I trust them. Okay. Okay, great. So the approximate cost would actually be higher. And I'll tell you why. It's because you have less units. So the actual correct number is $507.88. So the reason why it's a little higher than 500 is because you have you have an additional like 700 units that you're throwing into the pile that don't actually exist, which means that you're diluting that $20 million. So because you have a smaller number of units to spread across $20 million, it's actually the per unit is more expensive, right? Because if you think about if you added another 40,000 units for no reason, then that would mean that those additional 40 units at 20 million would drive the price way down because you're creating more units. Whereas because you have less units, you're actually shooting that cost up on a per unit basis. Does that make sense? It's really, really tricky. And I actually had to second think it whenever I saw lower, but it is higher. That's actually really hard to do in mental math, but like if you can get that intuition, you're like top box, like you're ready to rock with some of these mental math problems. So, um, for C, is anyone willing to take up C and do a live call in? I would love to see someone else's face that is not mine. Only if Knight won't. Well, that just sounds like Alicia should take C and then Knight should take D. And we'll work through it together, right? I haven't even really read C other than I see a 75,000 in it. As someone who's just spent the last like 20 minutes doing mental math and haven't actually used these skills in a while, it gets better once you're actually doing it. There we go. Hello, hello. How you doing?
Hello, hello. Can you hear me?
Yeah, I can hear you great.
Okay, awesome.
All right, we're gonna tackle this together. So we've got our total costs are $75,000. Labor costs make up 25% of total costs. So how much are our labor costs?
Okay, so I would start by, I always do it in fractions, so I would know that 25% is a fourth. And I would break down the 75,000 into 70,000 and 5,000, just because it's
Mhm.
easier for me. And I do a fourth of 70, which are just half to 35, and then half again to 17 and a half.
Mhm.
Yeah, 17 and a half. And I'd do the 5,000, which a fourth should be 1250, and then 1,500.
Which is? Yeah, it's a little bit north of 18,000, right? Awesome. That was perfect. And if you said that in an interview, you would have been golden, right? That's actually not how I would have processed it because I don't work well in fractions. But I'm so glad that you shared that because that is a great way to actually go about this problem. So I'll share how I would go about it, just a little bit different. So you did fractions. You broke it down by one fourth, and then you broke the 75 into 70 and 5. I would have done the tens. So you've got a cost of 75,000. So what is 10% of 75,000? It's 7,500. So what is double that to get to 20%? Well, it's going to be that would be 14,000 and then 15,000, right? So then to add another 5%, you would just take what is 5% of 75,000. Well, if you know if 7,500 is 10%, what's half of that? You're looking at uh, that would be basically a little over 3,500, 35,750, something around there. So
Mm-hmm.
then 35 or yeah, 3,750 plus whichever number I had just said, which was 15,000. You're gonna get somewhere around 18,000 and change. Okay, so it's a little bit different way to go about it, whether you want to work in tens and build up and then do half of 10 to get to 5, or if you want to do the quarter. I think both of them work really great. So that was awesome. That was really, really great. Now it sounds like, you showed up. I think we
Night
got
has
another
to do
person
it.
that's got to show up. Night's coming up next. I'm telling you. All right, I appreciate you, Alicia. All right, Night. Are you stepping up to the batter's box? In that case, I will walk through some more of these, and if we want to get some more participation, would love that. But I know we've got about 15 minutes left. Um, just getting the theme music going. Okay. Okay. So 4D, you bought a stock for $36 a share. Today it jumped 6%. How much is the stock worth? I'll give you all a second to think about it, and then I will present how I would go about it. And I think we're probably just going to get to mental math today. Because we don't have too many participants, I'm guessing that we'll probably do a rerun of this later in the class whenever more people can attend. Okay. Today it jumped 6%. That was a hard one. Yeah, yeah. So 6%. How much is 6% of 36 is the first question. Well, I like to work in tens. So I know that 10% of 36 is 3.6. So that what's 5%? Well, it's half of 3.6, which is 1.8. Okay. Is that right? 1.8. So it's a little bit more than 1.8. It's exactly 1% more. So what's 1% of 36? Well, 3.6 is 10%, so 1% is 0.36. So you take 1.8 and you're going to then add 0.36. So you're going to get 2.16. Is that right? Let's double check with the math just so that way I'm 100% right for y'all. Times 0.06. 2.16. Is that what I said? I think that's what I said. 2.16. So that is how much it jumped. How much is the question is not how much it jumped though. How much is your stock worth? So you take 2.16 and you add 36. So 37, 38, 38.16 is how much the stock is worth. The way that I did that is I went down to 10%, then I split it in half to get to 5%, and then I added 1%, which was just, again, moving the decimal and add that to the 5%. Okay? These are good exercises because it's not that you're going to actually be saying this all in the interview, but rather that you can say it as you're writing it down and showing it to the interviewer. So especially if you're in person, this is like super useful because it's how you can communicate a sense of executive presence while going through the mental math and writing it down as you share. Okay. And if that was hard, again, just continue to get the reps. That's why there's like 7 of these on the page. Let's try some more. You raised $3.5 million for a startup. Not too shabby. Your commission is 2.5%. What is your commission in dollars? Well, if you take my advice, you find 10% is 350,000, which means that 1% is 35,000. So 2% is double that, 70,000. And then 0.5% is half of 35,000, which we just did, I think, which was like 17,000. Is that right? Yeah. So 17,500 plus 70,000, which is 87,500. And that would be the commission in dollars. It's just different ways of cutting it up. What is 7 times 45? This is actually where it could be really helpful to do that chunking out that Elijah shared. Okay, great. We're ready to hear it. Big moves. All right, what's the word, Daphne? 7 times 45 is 315. Okay, 315. And how did you build that out again, just to share it with everyone else? I actually don't know. I'm about to. Yeah. So I don't know the answer yet because I haven't worked it through. But I want to hear what your thinking was, and then I will share what my process was, and I think we'll probably get to the same answer. Mm-hmm. Yeah. I think you're right, and I think what you're doing is you're chunking it out in a bit of like a nuanced way. What you're saying is you take 7 times 40 and then 7 times 5, right? And right. But the 40 is essentially just doing it, yeah, doing it 10 times over, right? So, um, cool. I like that. So what I would have done is actually rounded this up to 7 times 50, and then I realized that I just added a 5, so then I would subtract 7 times 5. Okay? Because I think that's how my brain would work on this. So I actually don't know 7 times 50. Um, well, it'd be 350, right? Because 7 times 5 is 35, and then you just add a 0. But if I didn't know that, another way I could do it is I know 7 times 100 is 700. So then what's half of 700? It's 350. Okay? So we know that 7 times 50 is 350. Now we have to subtract 7 times 5, which we know 7 times 5 is 35. So what is 350 minus 35? It's 300. Yeah, look at that. So two different ways to arrive at the exact same answer. Fantastic. Man, Knight, we got a lot of people that are rooting for you over here. I appreciate you, Daphne. Thank you. The number of current outstanding shares for UKL Inc. is 41,084,000. Institutional investors hold 25,171,000 shares. What is the approximate percentage of shares held by institutions? Man, you got a hard one on this last one. I'm telling you, Knight. I mean, it doesn't have to be hard, right? It's always about balancing precision with accuracy. I'm getting slacks from work. Sounds like we got some more conversions for work. Woo! We're running a huge event out in New Jersey right now. Trying to get people in. Cool. Okay. I guess like 60 or somewhere above 50%. Yeah. Definitely above 50%. So that's a great way to think about it. And like that quick intuition is fantastic. So no worries. We'll walk through it. But I think your intuition, Elijah, is like really good. So 25 million and 41 million is essentially what we're working with. So let's work in tens. If it's something that's closer to the middle, like this seems, because 25 is pretty close in the messy middle of 41, then it's almost worth like figuring out what 50% is and scaling up and down from 50%. So what is 50% of 41 million or 40 million? Let's make it even easier for ourselves. It's 20 million, right? So because 20 million is too low for 25 million, we need to go up by 10%. So we're looking at 20 million plus 10% of 40 million, which is 4 million. So you've got 24 million is approximately 60% of 40 million. Actually, it's exactly that, but it's approximately 60% of 41 million. So we're just a little bit above 60%. So I would guess that we're probably somewhere around, because it's 41, because we chopped off a little more, we're probably somewhere around 62, 63%. And that is what I would say. I would say we're definitely not above 65%, and we're definitely above 60%. So I would say about 63%. If you want the actual number is 25,171. Oop, let's clear first. Come on, calculator. There we go. 25,171 divided by 41084. How did I do? 61.2%. So I actually rounded a little too high. But the idea of that I'm in the ballpark within a margin of error of 5% is where you want to be. Okay, great. We are basically at time. So just a little bit of a view of what we had in the future of this session is understanding and interpreting charts. So these are all of the different charts that exist, as well as their functions and how you actually go about processing these charts. Then we're going to talk about some client practice questions, and we'll actually walk through how to build out the framework. We'll then talk about the how to interpret these graphs, how to relate graphs to each other, how to work tables into discussions of graphs, how to conduct a quick algebra on the spot for Quant, how to interpret really confusing graphs and actually translate them into tables. And then we'll walk through another case question that has a confusing graph and actually draw insights, which is one of the things that we talked about at the at the beginning of like one of the really important parts of quant. And then just some conclusions, and then ultimately what we're going to be doing on Friday is a case itself. It's a pretty simple case. It's the first case that I always run, and I just think that it's super useful. So that will be what we talk about on Friday. But everything that we didn't get to today, we will definitely 100% talk about in the future, because I assume a lot of people are going to want to talk more about quant, and I think that we'll revisit that whenever everyone's back from Singapore. Yeah, Singapore. So with that in mind, I'm going to stop sharing, but would love to use the last 2 minutes or so to see how you all feel and what other questions you may have before we wrap up. I hope that this was helpful. Do you all feel a little bit more confident in quant after today, at least in your mental math and in your understanding of profit? I would love to maybe get some quick, immediate feedback, because this is a really tricky part of casing. But if you can do it well, then you're going to be ahead of the pack by quite a bit. So it's well worth it. How often can we round the numbers? Very, very often. So if you have like a 41, you can almost always take it to a 40. If you have a 25 or a 26, or if you have a 26, you can round it to a 25. I would say just be reasonable, and the true answer is that it depends on the interviewer. So always ask is the truth. Like whenever you make a rounding decision, you should ask, like, is it okay that I make this round? And then most of the time they'll say yes. Especially if your intuition is right and it's not a horrible, like, super intense round that you're doing. But then the other thing is that I would actually, like, write down in note what the actual number was, and then say, like, where you rounded it on your paper flow. We didn't talk about paper flow today because we didn't have time, but that's important, because whenever you look at your final conclusions, you want to note all your assumptions and all of your rounding, because if you round it up, then you need to maybe be more lenient or liberal in whenever you end up rounding down later to, like, balance things out. So just keep track of all of the rounding that you do in the exact same way that you would track your assumptions throughout a case. Good question. Well, with that, I hope that this was helpful, and I will get back to work because it looks like my Slack is blowing up. But hopefully I'll see you all on Friday. Friday, we are doing a case, so if you're interested in working this case with me, it would make my life a lot more enjoyable, because, like, I don't really want to be the interviewee and the interviewer. So if you're interested, send me an email and I will give you guest privileges on the next session. Right there. That's my personal email. Is there OPEX and CAPEX? No, that's like a little too finance heavy for consulting cases. So you should know what OPEX is and CAPEX. But it's really just going to be, like, capital expenditure is just going to be rolled up into total fixed costs. So yeah, that's more of like if you're going into a banking interview and you need to pull out Excel and actually showcase your Excel skills. Same with, like, net present value and future value. They're important to know conceptually, like you should know these things conceptually, but you're not going to have to calculate an MPV by hand on the spot. You're not going to have to calculate an IRR on the spot. If you do, it would be kind of like, it would surprise me. Not to say it's never happened, but it's pretty rare. Okay. I will let you go, and I hope to see you all on Friday. Take care. Bye.